Hey guys, good morning. So today I'm just going to take you through my expectation for the dollar and the foreign currency. Remember that previous weeks I did a commentary and explaining where I anticipate to see the dollar trade into starting from the month of March because of the March contract for the seasonal tendency for the dollar, right? Remember that video I did about the seasonal tendency for the dollar? If you can't remember, you should go back to my YouTube channel and watch that video. I think around January I did a video on seasonal tendency. So look at what price has been doing. We see on the daily time frame, price traded into a mitigation block right here. You see that price traded into a mitigation block. Then we see the dollar created a shift of market structure. Remember that our analysis always starts from the weekly or monthly, weekly and daily time frame, because these are our higher time frames. Okay, so we on the weekly time frame, we actually saw the dollar traded into a fair value gap or a bearish order block with a fair value gap. Remember, I always emphasize that the most valid order block is the one that has a fair value gap attached to it. So look at what happened. Price traded into the monthly sell side imbalance, the buy side inefficiency. You see that these levels here, this sell side displacement, one-sided displacement to the downside, price traded into that level. All right. And if you look at this current trading range between the low here to the high over there, remember we would like to sell in a premium market and we buy in a discount market. So price traded into discount and price had to go back into a premium for us to continue selling the dollar, and this is also in confluence with the seasonal tendency chart. So price traded into that monthly time frame sell side imbalance, the buy side inefficiency right here as we see. All right, so price traded into that level, and guess what the dollar formed? The dollar formed a swing high in between that institutional reference point. We see the dollar formed a swing high, 3 candle price action, with the middle candle having the highest high right here. I've told you guys that this is a powerful reversal pattern, candlestick reversal pattern. Then price created a new displacement to the downside, creating an institutional order flow entry drill. Fair value gap by the right, fair value gap by the left right here. That's an IOFED. So we expect to see the dollar trade to the drawn liquidity. Where's the drawn liquidity on the monthly time frame? The old low here, the old low here, and ultimately the drawn liquidity will be, you can see the fair value gap below that old low. That's a hack for identifying drawn liquidity, and again ultimately the mitigation block residing right below that will be the drawn liquidity for the dollar. Then on the weekly time frame, we see the dollar traded into a bearish order block with a fair value gap. Look at what happened on the weekly. Price again formed a swing high, 3 candle price action, with the middle candle forming or having the highest high. I told you it's a powerful price action reversal pattern. You see that the middle candle having the highest high, 3 candles, 1 candle by the left, 1 candle by the right, but the middle candle obviously has the longest candle wick. Okay, so once we see that, we know that this indicates that we're about to start dropping, and this is in confluence with the seasonal tendency chart. I emphasize that during the second week of March, we were expecting to see the dollar drop into the monthly, the weekly draw liquidity. So where are those draw liquidity on the weekly time frame? Of course, there's a fair value gap below here. There's an old low right here. Let's outline it. The old low here. You see that the fair value gap here, the old low here, the equal lows here, all these are the drawn liquidity on the weekly. Then on the daily, we are looking at market structure. You want to see price action formed that lower low, lower high in a bearish market structure after creating a shift of market structure. So price traded into that weekly bearish order block, which is a daily mitigation block. You see that. Then we see the dollar created a shift of market structure bearish. This confirms that now we are in a bearish market environment. You see that at the time the body of the candle closed below the last higher low here, you see higher low, higher high. At the time the body of the candle here closed below the last higher low, we had a shift of market structure and price created a bearish mitigation block. Then in the order of importance, institutional reference point, always remember we've emphasized that the mitigation block is the first to put to consideration in the order of importance, then before you start looking for others. So price traded into that bearish mitigation block. You can see there was no fair value gap around it. It's just the mitigation block. So price traded into the mitigation block and started to drop. So where is it dropping into? Look at this, the relative equal lows here. You see that? Then where is the next level? These levels here and the level here. This is draw liquidity for the dollar index. Okay, so right now the dollar has created an expansion lower. What do we anticipate to see? We anticipate to see a retracement into a premium level. You see that fair value gap with an old wick in between. That's an institutional order flow entry drill. Old wick in between the fair value gap right here. That's where I want to see the dollar trade into before we continue creating bearish expansions and bullish retracement. All right, so let's study how this happened on the 1 hour time frame. We could have seen how the dollar started to trade. So the dollar traded into, you can see the bearish mitigation block. Okay, we had a shift of market structure bearish. The dollar traded into the bearish mitigation block around this level. Okay, so you can see this was on a Thursday. The dollar traded into that level. Then let's see what happened on Friday. So all of this price action, we know it's the end of the week. Reversal. Price has been selling all through. So during that Thursday, we see that reversal happen on going into Friday. Price consolidated. But then look at what happened during that Friday price action. Price actually took our liquidity above a high here. You see that? Then price action created a shift of market structure bearish. Shift of market structure bearish. All right, on the dollar. And this was what started the sell that we see on dollar index. Price has been selling. Let's see, this was on Monday. Price consolidated. Okay, then on Tuesday, let's see what happened. Now we are coupling weekly market profile. All right, on Monday market consolidated. This is why we say most Mondays we don't like to trade, because the Monday is for accumulation of contracts for the week. So price consolidated on Monday, and look at what happened on Tuesday. Price created a shift of market structure bearish, creating a mitigation block. And of course, you will have seen a smart money divergence if you correlate this with other assets like the euro and GBPUSD. You see, failure swing, shift of market structure bearish. Price formed a bearish mitigation block, but there's a fair value gap right above it. Okay, so we pay attention to the fair value, because when price is retracing, it is actually retracing into fair value gaps for fair valuation. You see that price traded into that level specific. This is where we could have taken an entry for the dollar to sell and to buy the foreign currencies. All right, so I hope that this is insightful and educating, and until next time, I wish you good luck, good trading, stay safe.